We're trying to work out at the moment whether it is a deal or not. There's a lot of very, very overblown rhetoric.
The American consumer is really struggling with food prices, and tariffs have a major factor. We have a lot of food that's rotting in the field.
The country was in an absolute crisis mode. People are really struggling and not having enough money to actually live. The question is, how much longer can it stay like this?
Hello and welcome to The Dip, your essential briefing on money stories that cross borders. I'm Daniel and I'm flying solo this week because Cassandra is off on the Isle of Wight cosplaying Queen Victoria or something, but she will be back next week. Coming up, will the US food prices ever come down? Prices in supermarkets and restaurants keep rising, and we'll find out why from the supermarket guru himself. He's retail analyst Phil Lempert. Plus, Javier Milei gets a big thumbs up for his economic plans, but it could mean more pain in the short term. But first, the US and China have struck a deal after trading insults and threats for months. Let's find out more from our China analyst Clifford Coonan, who joins me in the studio. So Clifford, what's going on? What is this deal that we've seen from the US and China?
Well, we're trying to work out at the moment whether it is a deal or not. It's maybe a stage in the process, certainly, I think. And obviously, there's a lot of very, very overblown rhetoric about, 12 out of 10 and, how it's a great deal. The visuals were very important. We had pictures of Xi Jinping shaking hands with Trump, and they were clearly warm. There was a sort of a warmth there. They've always actually had a bit of a connection. And Trump does like his fellow authoritarians, but but in terms of actual substance, this is all about the theatre. It's political more than economics. So, there was a focus on fentanyl because he's playing to his domestic audience and he knows that fentanyl and opioids, that resonates with American voters.
That was the whole reasoning initially behind introducing these tariffs, also on China, not just on China, but also on Canada and Mexico, was saying that we want to reduce the fentanyl or fentanyl precursors that are coming across the borders. So he's still banging on that drum, is he? Yeah,
because it seems to resonate well. What I think he didn't really anticipate was that one of the spin-offs of the trade war would be that the Chinese stop buying soybeans, which is hitting farmers, which are a key constituency for Trump.
That means billions less in income for US farmers, just the soybeans alone.
Right, and it's in the US heartland. This is core Trump territory. So I think he wasn't anticipating that. And then the other thing that was a big problem was the rare earths, the way the Chinese control most of the rare earths and critical minerals that are needed for cell phones, cars, all kinds of tech. Submarines, for example, a submarine needs 4 tons of rare earths, So I think that kind of wrong-footed Trump to a certain extent. And now they've come up with a deal, which is basically just kicking it down the road for another year. So what we're seeing, though, are all these different stages happening. I think a big focus is going to be on April, when Trump is going to go to Beijing, because there's an opportunity for him to present a thing on a global stage, very much on his terms, as a kind of a conquering trade hero. And I think that's possibly what's going to happen. There's a slight sidebar in that he also announced that, which isn't really related to the economy, but it is related to the overall trade negotiations, because he announced that he wanted to resume nuclear testing, which they haven't really done since 1992. And that I don't know if this is a negotiation tactic or not. People are trying to decode what that is. But it probably wrong-footed the Chinese, because it did provide a sort of a sour note into things, but it wasn't really reflected, though, in the handshake. So maybe the Chinese were aware of it beforehand. And so I was just looking, the New York Times, Nicholas Kristof in the New York Times says that Trump has lost the trade war that he started. Now, the New York Times is always going to say that. But at the same time, though, it does point out that in some ways the Chinese have just kind of matched things quite calmly in a way. And it's definitely hit their economy. But I think that they've, at the same time, they seem to have played things reasonably well.
We talked about it in a recent episode when we were saying that there was this good cop, bad cop routine coming from the US, but that they were actually playing into what China was doing as well. And that China has long used these kinds of routines. And so that they did match each other's energy in that way. Sometimes they were aggressive and then they got an aggressive response. And then sometimes they were more conciliatory and got the matching response as well. So it seems that China has played it in the right way here. Is that fair to say, first of all? And then second of all, how hard has it hit their side? We talked about how hard it hit the US, but how hard has it hit China, this trade war?
Well, I think those two answers are kind of connected. I mean, they've presented themselves as victims at times. They've presented themselves then as they've done nothing at times, which is also a tactic. And so that they're very much, so they've come away. There's an old saying that, China's always talking about win-win situations, which means China wins twice. and there is an element to that, actually. But on the other hand, this has hit the Chinese economy. It's hit exports. Now, they've managed to shift these exports from the US to other countries, particularly the neighbors in Southeast Asia, and then a lot to Russia and various other markets. At the same time, that's going to eat into goodwill because these, they're kind of flooding the market with Chinese goods. The people don't want it. It's just the Chinese are basically, dumping them there. So that will be a problem. But I think that the fact that exports have gone down and they have been hit, and it's the only really positive thing in the Chinese economy right now. There's no, the property sector is still in trouble. There's no investment. Youth unemployment is very high. The economy is growing, but it's sluggish.
Because they've seen for a while that they were too dependent on exports. And part of that was dependent on exports to the US.
Yeah.
And they've been trying to stimulate domestic consumption in order to kind of balance things out a bit, not to put all of their eggs in one basket.
Yeah.
And that hasn't been the runaway success that they wanted it to be so far.
Mm-hmm. Yeah, and I think another on that note, self-sufficiency is a big issue here. What we're seeing now is one of the things that the US has actually done is it's signed all these deals to get rare earths from other countries. You're going to see a lot of this now. I mean, whatever happens with the trade deal, the global trade has been reset. It's not like it was. It's not.
China knows that you can't be self-sufficient, you can't be an autarky and be the exporter to the world.
Yeah, it does, but it's basically, it needs to stimulate domestic demand. It doesn't really know how to do that. To do that, it would require the kind of political reforms that the Communist Party just can't really allow. They need to open up their capital accounts. They need to know, they need to internationalize the renminbi, which is impossible because it's got so many controls. I mean, to a certain extent, it's possible, but it's never going to compete with the dollar in its current form. So it's got a lot of challenges, and so I think this has been one of the, with this trade reset, it's going to provide. We're obviously focusing very much on, like Nicholas Kristof on what Trump has done, but it's also going to mean a lot of changes for China too, and maybe that could be destabilizing. We'll have to see how it plays out. But they have been able to absorb a lot of pain because it's a communist government. They don't have people have to go to the polls every 4 years.
So what you're saying is we can't necessarily be sure that this is going to be start of a beautiful friendship between the US and China.
No, I mean I think that'll be the visual element that we get and the theater element that Trump so loves. But in terms of, there's a lot of issues that have been raised here now that it just probably won't go away.
Okay, and in other news, you've spent some time interviewing a Nobel Prize winner this week. What did you find out?
Well, that was very interesting because Philippe Aghion is he's a French economist, and and I interviewed him in his beautiful apartment in Paris, which was spectacular. His mother was the founder of Chloé, the fashion brand.
Wow.
And his father worked with the surrealists. And he was an art dealer and who was friendly with all the surrealist art movement in 1920s Paris. And he believed they were both revolutionaries and they were both innovators. And his thing is innovation. He thinks innovation is really, really important. And it's interesting because it ties in with the US-China thing, because he said that if Europe is to compete with the US and China, it's going to have to reform, because only that way can it innovate. And we've had this report on innovation in the EU from Mario Draghi, which he said is a good thing, but hasn't really been implemented. And, he said, I mean, that was the main thing. He said he was interested in what was happening in Germany. He said he thought Merz's heart was in the right place. He said that Keir Starmer, who he'd just been over with, in the UK, he said he seems to want to get back with Europe, which he saw as a very positive thing. Unusual for the French to be so glowing about the English, but. Yeah, so that was, but the innovation thing was very interesting. He says really, Europe does really need to reform if it's going to have a role to play when so much is happening with the US and China, and Europe is being left behind. And so that's really his essential message, I think.
And it's a message that we keep hearing time and time again. And so it's interesting to see how we'll get to the point of those reforms, because you've got to get so many countries to agree with each other. And that's the difficult thing about the EU. So where can we see this interview in full?
Well, this will be on the DW News channel, so you'll be able to see it there, and and you'll also get a glimpse then of his beautiful apartment in the background. He had like all these beautiful paintings, and I know I shouldn't be focusing so much on the background, but it was really it was a very French experience somehow.
Okay, well, Clifford, thank you very much for that. Now let's move on. Have you noticed how expensive everything is these days, including for basic necessities like groceries? Well, it's not just you. The data bears it out. Food prices have rocketed. Is it down to the tariffs that we just heard about, or is it more about greedy supermarkets that just want to take a slice? And will things get better? And when will they get better, if they get better? Well, I spoke to retail analyst, he's known as the supermarket guru, Phil Lempert, asking him how bad the situation is right now.
So the reality is, since the pandemic, food prices here in the U.S. are up over 24%. Now, if you take this year's increase, which is going to be about 3 or 4% on top of that 24%, and if we look to the future in 2026, I would predict that we're going to see another 5 to 10% increases. So the American consumer is really struggling with food prices and making a lot of, behavioral changes as a result.
Okay, and so we've heard from a lot of farmers lately saying that they're being hit hard by the tariffs. How big a factor is that in food price inflation, or are other factors playing into it here as well?
Well, there are some other factors, but certainly tariffs have a major factor. There's two things here in the U.S. One is tariffs, and that's everything from on manure and feed for animals, obviously with machinery parts, and then also let's not forget the ICE detention raids, where in California especially, we're seeing a lot of farm workers not even showing up for work. They're afraid to. So we have a lot of food that's rotting in the field, and obviously that increases our prices as well.
Okay, and then looking at the trade, you pointed out in your recent Forbes article that the US imports about $200 billion in food, beverages, and animal feed from Canada, Mexico, and China combined. You've tracked food trends and policies for decades. Have you ever seen this kind of volatility in trade policies you're seeing now?
Absolutely not. And, it's more than just trade policy. The problem that whether you're a farmer or, a food manufacturer or a retailer, it's the uncertainty, not knowing what's going to happen tomorrow. So we have tariffs today. We don't have tariffs tomorrow. We have tariffs on this. What we have just the other day is the Senate passed a resolution to take away the tariffs from Brazil, because Brazil, frankly, when it comes to beef, when it comes to coffee, is a major exporter to the U.S. And we know that, the House is closed here. So as a result, it's not going to pass. Who knows if it will pass? But it's really the uncertainty for the food world that needs to plan. We need to plan years ahead what crops are going to be, planted in the ground. We need to, plan ahead for imports. And all that has been taken away.
Okay, there is also some potential volatility on the kind of upside as well. So there's been a bit of reconciliation we've seen this week between the US and China. And while we're recording, it looks like a deal could be struck between them to significantly lower the tariffs in some areas. Would that be enough to reverse the impact on farmers and consumers? I'm thinking, for example, about how China has cut all of its purchases of US-grown soybeans, for example, and how farmers have been severely hit by that.
Well, in fact, this morning they announced that China has done the first order of soybeans. So maybe we're going to see it. But again, we don't know how long it's going to last. Look at what happened with Canada, that, everything seemed to be on target with Canada. And then all of a sudden, more tariffs on Canada. So we just don't know. It's really the uncertainty. What I can tell you is a lot of goods from China have been affected already. If we look at, Halloween costumes, and Halloween coming up later this week here in the US, the price of costumes have gone up 20 to 40% because most of those have come from China. So we're still seeing the effects of it. And the question is how long they'll last.
So it looks like some Americans might have to go back to making their own Halloween costumes at home, perhaps. But that actually feeds into an important question, which is how are consumers changing their buying habits with all of these prices rising?
Well, certainly in the supermarket, when it comes to food, we've seen a major shift to store brands where people can save money. And at the same time, what's really good is store brands probably over the past 5 years have increased their quality. So that's been a positive shift. The other thing is people are heading to the frozen food case, whether it's for beef, whether it's for seafood, whether it's for vegetables, because those are less expensive. Third, and probably the most important aspect, is people are stopping to waste food. Here in the U.S., about 40% of all of our foods are wasted, a lot of that at home. So people are just being really smart about not wasting food.
You mentioned the increase in quality. So what is it at the moment that companies are doing to adapt to this changing environment and changing consumer expectations?
Well, people are copying Aldi and Trader Joe's and Lidl. That's what they're doing. They saw that these three retailers have really upped the game, increased quality, and by doing that, they've been able to attract a Generation Z and millennials who really care about a lot of food quality as well as value. So now every chain is following suit. In fact, just the other day, Kroger announced a new line, a protein line, again, tapping into that whole, protein phenomenon that's taking place, whether it's because of people on GLP-1s or people just wanting more protein. So retailers are curating, if you would, their store offerings more than we've ever seen. And that's great news for the shopper.
There's a lot of accusations out there that the supermarkets are being greedy. So when we look at Walmart and we see 56% growth in net income in the previous quarter, a lot of people would say, well, the price increases are just the supermarkets taking more for themselves. On the other hand, as you know, supermarkets have traditionally run on very thin margins. So what is your assessment? Are we seeing greed here from the supermarkets, or are companies, Walmart, just at such a scale that, of course, any little tweaks here and there are going to lead to massive outcomes for them?
All of the above. So if we take a look pre-pandemic, the average supermarket netted about 1.5% net profit. Now, that might not sound like a lot, but if you've got a couple thousand stores and stores are doing about $1 million a week, that amounts to a lot of money. Now, during the pandemic, yes, they did get greedy. That went up from about 1.5% to just under 3%. Since the pandemic, it has come down. But keep in mind, during the pandemic, they had increased their costs, whether it's, more cleaning of shopping carts or those plexiglass barriers. All of those kinds of things did increase the expense for a retailer. So when we look at Walmart in particular, Walmart is one of the most efficient chains that there is. So they can take a lot of waste out of the system. What we're now seeing here in the US, and I think it's a short-term strategy that's going to fail, we're seeing a lot of retailers from Walmart, Target, just about everyone laying off a lot of people. A lot of those are not at store level. A lot of those are corporate level, but you can't lay off, 10,000 people and not have some kind of effect. And also at the same time, Nobody wakes up in the morning and says, I want to go work in a supermarket. As a result, they've had to raise the minimum wage, that hourly wage, to attract people. Most supermarkets have a labor shortage right now, which is why we're also seeing new technologies like electronic shelf labels being instituted in stores to be able to save labor.
That we've seen, for example, if I think about Amazon and its automated supermarkets that it launched in the UK, it's now exited that market very quickly. Are we seeing that some of these kind of technology bets that supermarkets have been made aren't paying off the way that they thought they would? And of course, at the moment, there is a lot of buzz around AI and how that can make processes more efficient for supermarkets. Are we actually going to see any efficiencies realized here, do you think? Or is a lot of it kind of bluster and will require a lot of experimentation before we actually see any results?
Well, supermarkets, as a result of the pandemic, again, threw stupid money at stupid ideas. And if you take a look at Amazon Go, the problem is that when people shop for food, it's very primal. People want to have a great experience. They want to talk to Bob the butcher and Betty the baker. Food should be fun, and it should be very, primal. Amazon got away from that. However, I will tell you that what we've seen in the past few years, Jason Bushell, who was CEO of Whole Foods, now the head of Amazon Grocery Global, he brought Whole Foods back into the food business. And I think we're going to see that across all of the Amazon. If you take a look at Whole Foods' new format, which is called Daily Shop, smaller store, between 5 and 10,000 square foot, lots of fresh food. They're using automation smart. Self-checkout, certainly. Back room, certainly. But, from you and I, as a consumer standpoint, we want to smell food. We want to see food. We want to enjoy our food. And, Amazon Fresh stores, what they had is you would walk in and you'd see all the electronics. That turned off people. People turned around and they walked out. They want food. So when I think about AI, I believe that there's a major use of AI for people who shop online. So I can go in to the chat box, and I can say, I'm going to have a picnic for 10 people. 2 people have diabetes. 1 person is gluten-free. 1 person wants high protein. I don't want to spend more than $6 a person. I want, craft beer, on and on and on. And, in a couple seconds, it prints out whatever recipes I need, and it prints out the shopping list for me. That's a good use. That, from a consumer standpoint, is good. I think that using AI for predictive, where, supermarkets look at, what weather conditions are going to affect what products on sale. Sure. But we have to remember it's still food. And I think the more AI and the more technology that we use in the back room, that's great. Front of house, not so much.
Okay. I imagine also that the rise in price in food is also hitting restaurants, but at the same time, if people's pockets are being squeezed, then they're less likely to go into restaurants and more going to cook at home. So how is the situation at the moment for restaurants and also the consumer packaged goods companies that make some of these products that people know and love?
So restaurants are hurting. There's no question. In fact, just this morning, a report came out that found that about 1/3 of restaurants are now having their food being taken out. So we're eating at home. We're eating at home for a bunch of reasons. Number one, we don't have to tip. Number two, we can have our own wine, so we don't have to pay those expensive prices for wine. Number three, we just want to be at home. We don't like going out. I mean, the world has changed dramatically. And for a lot of people, whether it's going into a supermarket or going into a restaurant, they're apprehensive. They want to have personal security, if you would, as creepy as that might sound. As far as restaurants, what they're doing is they're raising prices, no question about it. They're reducing their portion size, no question about about that. They also have a labor shortage, so they're trying to attract as many people as they can to work in the restaurant. But I think we're going to see a lot more restaurant failures than we ever have, especially those small independent restaurants, those mom and pops who are really struggling because they don't have the buying power of a Cisco, of these chain restaurants that can, forge ahead. I mean, if you look at Starbucks with coffee, the reason they haven't increased the price of coffee, and a lot of independents do, they get coffee futures years in advance. The little coffee shop can't afford to do that, doesn't even know how to do that. So for restaurants, it's a really tough time.
Okay, so where does this all go next? What can we expect in the coming months and years? You touched on it a bit earlier, but are we going to see our bills kind of getting easier to pay, the cost of food going down, or is it just going to get worse?
I don't think the price of food is ever going to come down for a variety of reasons. Number one, every product in a supermarket, 40,000 products, they all started in the ground. Even a Hostess Twinkie had roots in agriculture. And because of climate change, we've seen it with West Africa with the price of cocoa for, chocolate here at Halloween. The chocolate bars are now 10 to 15% smaller. The price is about 20% higher. So we have that. We have Brazil with our coffee prices, again, because of climate change going through the roof. We have a lot of crops that used to be able to be grown in California that have had to move to Central and Latin America because the growing conditions just aren't here in California anymore. So as a result of all that, I think that until we can really harness climate change or move a lot more to indoor farming, prices are going to continue to go up. Also, as I mentioned, labor shortage on the farm. We have that as a reality. We have labor shortages in food factories for those CPG companies. So they have to pay higher wages. We've got higher transportation costs. We actually have a shortage here in the U.S. of about 120,000 long-haul truck drivers who, bring our food to market. And they now have higher wages. They're getting bonuses, sign-up bonuses of $25,000 to $50,000 to become a truck driver. The money has to come from somewhere. And unfortunately, it comes to you and I. And then we've got the tariffs on top of it. And again, it's been reported that about 37% of the price of tariffs is being passed on to consumers. So what I think we're going to see here in the U.S. is a lot of supermarkets having huge displays as you walk in the store saying made in America, no tariffs. And those imports, whether it's olive oil, whether it's wine, whether it's those great cheeses from Italy and France, those are going to get hurt.
Thanks very much to Phil for that. Well, it looks like it's a lose-lose situation for a lot of people out there right now. I mean, he pointed out, for example, the small restaurants, the mom and pop businesses, food businesses of all kinds. The cost of food is rising. The cost of labor is rising. So, of course, these companies put up their prices, which mean that people go there less. They just decide to stay at home and eat there instead, which eats away these restaurants' profits. So they have to pump prices some more. And it's a vicious circle. No wonder so many of these small businesses are going out of business, because it looks like consumers are fighting back, essentially, switching brands, buying less premium products, hunting for discounts. But the big supermarkets, they're doing okay. I mean, what are you going to do? Are you going to go and plant your own food like it's 1929? Of course not. Where are you going to go? Your Walmarts and your Krogers, sure, they're in a business that's defined by razor-thin margins. But when you tweak at the margins, just by an increase of like 0.1%, then that means billions for them in terms of an increase in their bottom line, because they have something which many businesses are jealous of, and that is scale, especially Walmart. They are just so huge that even if they're making a razor-thin margin, that could mean billions for their bottom line. And, this is why everyone is saying on TikTok and on Reddit that things are looking really bad right now, because it's not just the food prices, but it's a huge spillover effect as well into the rest of people's lives. Because you spend more on food, you have less to spend on other things in your life. And people wonder why young people don't go out these days. I mean, They don't go to bars, they don't go to restaurants, they don't go to clubs. And it's right there in front of you. Next to housing, the rise in food prices is a massive concern as well. Year-on-year grocery price inflation is around 5.3%, according to one tracker. So you're spending on average $363 per person per month just on food. And if you add into that the average rent, which is well over 1.5K, tax, health insurance, all of these other costs that you have to have, these are essential costs, your money is evaporated before you even really get to it. And that's what's driving the big paradox in the US economy right now. I think that if consumer spending weakens sharply, which it could, at the moment it seems all right, but I think we could end up seeing a plateau or a weakening. The Fed could be pushed to cut interest rates sooner than it wants, even if inflation isn't yet tamed. And then we're entering more of a danger zone for the US economy, a weakening of the US economy. And that's a nightmare scenario that nobody wants because in the end, it's not going to help anyone. Now we're switching up topics to talk about Argentina. President Javier Milei won a convincing victory in the midterms, giving him the green light to continue with his tough economic medicine. And it seems so far that it's working. Inflation has fallen sharply and economic growth is looking fairly decent, having come out of this many decades of financial crisis. But the currency still looks shaky, and the government has a huge debt bill that it's going to have to pay down soon. And that's why Donald Trump has pledged to support Argentina to prop up its economy. But many citizens say they aren't getting the basic support from the government that they need. So to dig deep on this, I spoke to our correspondent in the Argentine capital, Buenos Aires, Jules Giesler.
I think what is important to understand here, we need to go back a bit to the elections 2 years ago to understand this, where when Milei came to, let's say, the broader political stage, because he's been around for a couple of years, but nobody really cared about him. And when he came on the broader political stage in 2023, we saw a soaring inflation rate of 211%. So the country was in an absolute crisis mode. And we need to understand this, that there is a collective trauma involved in the country where people are like, okay, we had a Peronist government for 18 years and it brought us to this crisis. We cannot continue like this. So people knew that they need harsh austerity measures to actually come out of these crises. This is how he got elected in the first place. And also he was an outsider and not part of the elite. So 2 years now down the line, he won because of 3 reasons we can see there. He brought inflation down to 32% annually, what is still, from a German perspective, a lot, but from an Argentine perspective, it's not. So it kind of stabilized the economy in this sense. On the other hand, we could see a middle class actually fearing that they could enter again an economic crisis. And this is why I explained before why people voted for him in the first place, because people are afraid that with another economic trajectory, the country would maybe go back to old times and they would see a heavy devaluation of the peso. So it was fear that played a heavy role there too. And we could see also 67% of the overall electorate actually went to vote, meaning that we've seen the lowest voter turnout in the last 40 years since Argentina came back to
Why
democracy.
Was that? Voting is compulsory in Argentina, isn't it?
It is. It is, but also here we need to take into consideration it is compulsory, but there is not really a follow-up. So yes, they say you need to pay a fine. The fine is between like 50 and 500 US dollars. But you do not really have a follow-up there. So it's not that people actually go after people. They don't have the means to do so either. So, and it kind of is that people are tired at the moment. So people who do not agree with Milei's politics, but also do not see a viable alternative at the moment, they did not go to vote. And I think one more point there, maybe just quickly, is that also the overall electorate now is younger. So we're talking about people, so it's about 39 years old. These are people who grew up in absolute crisis mode since in 2001, the whole economy collapsed. So they grew up with this and they're afraid to go back to it.
Okay, so maybe for people who aren't following what's going on in Argentina, what was the reaction to his win, not just from the public, but also from financial markets and economists and analysts?
If we look at the markets, there's been a very euphoric reaction to his win. Because it's like undoubtedly it was a win. Even if we look at the numbers, and 40% is a lot. And also he won over Buenos Aires, what is a lot, because usually it's a pair and a stronghold. So markets have been very euphoric. We can say that pesos, bonds, and also Argentinian stocks have all been strengthening in the last 2 days. And just to give you a couple of numbers. So the peso to dollar exchange, what it can be seen as like Argentina's most famous rate to see how healthy the economic is. It plunged up to 7%, what is a lot. And this means that now Argentines can get cheaper dollars, what is really important. An expert said it the other day, it's like you can kind of even say like the cheap dollar can be seen as a drug in Argentina, and people really try to get ahead of dollars and like as a hard currency. On the other hand, we could see that Argentine stocks on Wall Street went up to 48%. That is a lot. We could also see that the country risk index, so the measures the likelihood of a debt default, plummeted to 652 points. It should be between 300 and 400 basis points, but also seeing that where Argentina is coming from like over 1,000 points, 650 is the lowest level since June. So we do see that markets overall reacted very positively to these election results.
Okay, and it seems that that is a vote of confidence in his economic reform program and the fact that that's going to continue. So where is the status of his reform plans? We remember 2 years ago him coming out with the chainsaw and saying how he's going to slash the public spending. And it seems that although he's been quite a populist in his rhetoric, that his stance to actually carrying out the cuts that were necessary was a bit more technocratic, although maybe you disagree with that. Where are we at in the Milei agenda?
It's a good question. So yes, he came out with the chainsaw, and he started with a chainsaw if we look at public spending. So I think also there we need to see, like, he came out with very strong rhetoric throughout, but public spending he really cut by over 35%. Like he went in, he degraded certain ministries, over tens of thousands of public employees lost their jobs. So this were, like, we're talking about hard cuts, especially targeting education, healthcare, transport. So he cut also so many subsidies. And this is how he, for the first time also in over 14 years with this, he actually achieved a fiscal surplus, what the country has not seen. So reform-wise, yes, he did manage to, he went in with the chainsaw, cut all these public spendings drastically. Pensions were cut. You've seen protests also in the last 2 years with people taking to the streets. We've been reporting on this. At the same time, what he did not touch, and he called himself an anarcho-capitalist, right? So he said, like, we're gonna be all for free markets and no intervention at all. But it's not really true, because he did not really touch the peso. So he started off with devaluing it because it was absolutely overvalued. It was at like 360 pesos for a euro. And even like I was here 2 years ago, where you could see that changing euros or dollars for pesos, even at the like official exchange shops and studios, you would not get the official rate. You would always have the dollar blue or euro blue rate, what was like 3 times less. So you got for a euro, you got 1,000 pesos at the end. So where you could see like the actual value of the peso was not there. So he did not touch that. He devalued it for like of about 50%, but he kind of stabilized it. What was also important, because he had one big promise, and it was, we keep inflation down. We're going to manage that the inflation rate stays here and goes further down. So he needed kind of a stable peso to make this work. But in order to do so, he had to use up quite a bit of the national dollar reserves to keep it there. So in reforms, this is where we see we're still waiting for tax reforms. He said he would privatize so many companies. He could not, because he did not have the majorities in Congress, neither in the Senate. So he did not have a veto power in this sense. What might change now, looking ahead for the next 2 years?
Okay, and yeah, it's quite clear that even now people think that the peso is still overvalued, and what it looks like is, as you mentioned, the government is going to have to build up its stocks of foreign reserves in order to pay down this $18 billion of debt repayments, which are due in 2026. And buying those dollars should help to bring the peso down anyway without some sort of dramatic reform. I mean, this is the kind of course that people think Milei might take, is more this kind of rational course rather than a big sledgehammer blow when it comes to the peso. When it comes to the average person on the street, they have been hit by the original economic problems that existed before Milei that he's trying to reform. Some people were worried that the medicine is going to be worse than the disease. So how are they taking the current state of the economy, whether it's due to how it was or whether it's due to these tough reforms?
I think one thing I noticed, especially in the last week talking to many people on streets, is you see people are tired. You see that there is a certain fatigue considering his austerity measures. But at the same time, there is this sentiment of like, yeah, but okay, we're in there, we're trying. You could see that ordinary Argentines have been hit hard. So if we're talking about middle class and working class, these are the two groups that have been hit hard. We could see at the beginning also that through all his austerity measures that especially so small companies and kind of medium companies had to shut down. They could not take it. The price hikes, economy has been stagnating in the last months heavily. He also, one of his reforms was to liberalize the rental market. What on one hand was hailed as like, okay, yes, now you do have more flats on the market because people would actually put them back on the market because now they can get the rent they want. But at the same time, this meant for many people that even if you see like rents went down, they did not really go down. And because also you have like every 3 months now in these contracts where the landlord can just raise the rent and nobody knows to what extent. So this is the problem with this. So you have like ordinary Argentines crumbling to make ends meet. And there's this famous sentence. It's like Argentines live 20 out of 30. And it's like the last 10 days of a month, people are really struggling and not having enough money to actually live. So you do see this. You do see it also that you have less people going out. Yes, it is inherited in the culture that people still try to live and go out and enjoy life. And I think this is something really important, culturally speaking. At the same time, you see people do it less. And there is this tendency, if people can get dollars, they try to save them now. If people have pesos, they spend because it's still like very much present for them that they don't know. Maybe tomorrow it's not worth anything anymore. There is a certain stabilization, but we also need to see that a stabilization on a very high level. So if we look at prices and everything, it is shocking to see if you go to a supermarket now, because you also cut subsidies for for some products where prices were very stable for years. And this is all different now. So people go to a supermarket and they're like, they have more planning stability because inflation is a bit down. But at the same time, it is at such a high level that even me being here as a European with a European salary, it's like, yeah, the prices are high and you could compare them to Germany, but the income you cannot.
Yes. I want to touch on a couple of things before we finish off here, and that is the US connection, because obviously Javier Milei has been a bit of an inspiration for Donald Trump in a way, and they seem to be quite close ideologically in some senses, at least. And the US announced an economic stabilization deal, as they called it, with Argentina. How important is this factoring into Milei's economic plans?
This came at an absolute crucial point, and this was a lifeline for the Argentine economy and also for Milei's trajectory looking forward. Because as I mentioned before, Milei, in order to stabilize the peso at a certain level, he used up the dollar reserves the country had. So Argentina was really close to entering a new currency crisis. And taking this into consideration, this came absolutely at a time when Milei needed all the support and Argentina needed this money. But also looking forward here now, yes, it helps him. It also helps him now to plan. And with the blocking minority his party now has in Congress, he can continue with his economic overhaul because his presidential veto now cannot be overturned. So the other parties cannot decide on spending more because he still can block it. But in order to really get more reforms in, especially when it comes to taxes and having more international investments coming in, he needs to forge broader alliances with other parties. And here we need to see now if he manages to change his course from being very radical and very against all the others, or if he now comes back to the table and hey, let's negotiate. And can we actually build something here together? But there are so many things that factor into this. Yes, it comes at lifeline, but it really is going to be important to see if Argentina is able to repay its debt, as you mentioned, the 18 billion next year, or if they do not manage. Because if not, it's just a short-term incentive that's not going to go anywhere, but it's just going to build up more debt. And this is what some experts are worried about, that it just might be the last little lifeline before the economy is going to crash. And this is where experts have very different opinions about this. But I think at all of these, where we can see a common ground is that they say we need to observe the next 2 years and see what's going to happen if it actually is something that's going to stabilize in the long term, or if we're going to see what we've seen in the 90s before it collapsed completely. It's okay, it goes up, it kind of stabilizes, and then it crashes completely. And we see a massive devaluation of the peso. What people actually also thought is going to happen now, that we're going to see a devaluation. But the finance minister Caputo said, no, it's not going to happen. But the question is, how much longer can it stay like this? And are we going to see economic incentives and more investments coming in who can actually back up this whole plan and stabilize the economy in the long term?
Thanks very much to Jules for speaking to me there. I mean, it looks like a typical austerity, stability gambit, right? So the formula is that you take fiscal discipline, add in some deregulation, and then some foreign spending as well, some foreign capital coming into the country. And then you get the economic revival coming out of the other end. At least that's the plan. But that is hampered unless you have social cohesion and that the credibility of the government and Argentine institutions like the big banks still hold. And that's why these midterms were so important and why you saw a boost in the markets, because people are seeing, investors are seeing, that there is some sort of cohesion around Javier Milei's plan. There is some sort of buy-in around it, which will allow him to continue the reform plans, even though they have been disruptive and they have been painful. And it's the kind of shock liberalization model that you saw in Israel in 1985, right? So you had sky-high inflation there for years, kind of spending money that they didn't really have. And they took this whole shock therapy route. So freezing wages and prices, cutting spending rapidly. And it was painful, but for them it worked because it meant that they could go from something like 400% inflation to just 20% in the space of a year. And GDP rebounded the next year as well. It's not saying that it's going to be exactly the same with Argentina, but it is a similar kind of philosophy of this shock therapy route to get into a better economic footing. And that's the name of the game, right? Short-term pain for long-term gain. And Israel proved that you can do all of this shock therapy democratically, because that was what some of the worry around Milei was, and it's what a route that other countries have gone down, is to have some sort of authoritarian crackdown. But this was a democratic movement. Milei got approval from the people. And if you can get elites and unions and voters to agree that the old model is dead, then you're able to crush that inflation democratically. Argentina hasn't necessarily reached as broad a consensus yet. In Israel, it was a cross-party initiative where they were all in and they all agreed that something has got to change, something's got to give. In Argentina, there isn't necessarily as broad a base as Milei might want of support. And that's the big risk here, that he loses political legitimacy before the sustainable part of the recovery kicks in. And Milei is showing some success here with those elections, and it's why the markets have responded so well, but Argentina is not out of the woods yet. And now it's time to wrap things up, because that's it for this edition of The Dip. But if you want to send in some questions for our Q&A edition, which comes out every Tuesday, then send them to thedip@dw.com or go to this episode on YouTube and just leave them in the comments, and we'll put them to the biggest experts in the field. We'll put it to our network of global correspondents to get you the answer that you want. But until next time, thank you very much for listening to The Dip.